Hey folks, Dan Frio here with your opening bell for May 30th, 2025. So we had some major pieces of information just breaking the news probably about 20 minutes ago. I want to bring that to you. It's the PCE, the number one inflation number that the Federal Reserve monitors. That came out. Personal income came out, and the trade deficit came out. Some interesting numbers coming out. So how this is going to affect these things over here? Well, let's get over to it. I'm going to give you breaking news from CNBC. Let's take it away, Rick. He's going to give us all this data and more. And then when he's done, I'll break it down and show you market reactions and what my expectations are for the day. Let's get over to it.
Bye. Got some important numbers at the CME in Chicago. Rick, they should be hitting any second, right now, in fact.
Yes, they're hitting the wires as we speak. These are, of course, personal income and spending for the month of April. We're also getting inventories, which are hitting the wire first.
Okay, so let's get to this. I'm just going to show you why. Here's what the Federal Reserve monitors right through here. We got GDP yesterday. It was negative 0.2. It was a little bit slightly, that was kind of a disappointment. We got the unemployment rates. They came in, I think about a week ago, 4.2. They expected this maybe to hit 5%. Now we have the inflation rate. Look at it. I'm going to kind of cheat a little bit. I'll give you a precursor where it's coming in at right through here. This was how high? This was, I hate when it does this, 6, 7, 8% back in 2022. So let's get over to Rick for this data.
Wholesale inventories unchanged. We're expecting up 0.4. Retail inventories come in as expected, down 0.1%. And personal income is up 0.8, up 0.8%. That is almost triple the expectations. And it underscores, we could talk about a lot of issues, but when you look at income for the first 4 months of the year, they're powerful numbers, Joe. Up 0.6 in January, up 0.7 in February, up 0.5% last month, up 0.8 this month. This is a great 4-month start to any year.
So think about that. Incomes are up 0.5. If you extract that out, most of those numbers are equating out to maybe a 6% increase in wages. Now, I know this is national and kind of generic, but that's a pretty big increase in wages. So you have wages going up, what was he saying, maybe 5, 6, 7% a year, where we have inflation now at, what's it going to be? Rick, take it away for us. Let's see what the personal consumption expenditure rate is. That's the inflation rate the Federal Reserve monitors the most.
Now, with the income shooting up, and by the way, 0.8 is the strongest income month-over-month jump since May of 21, when it was 1.9. If we look at spending, comes in exactly as expected, up 0.2. This follows an up 0.7 number, which was the best since December of last year. Now let's look at real spending adjusted for inflation. Comes in a little better at 0.1, but well below last month's up 0.7, which was the best since January of 23. If we look at the inflation numbers, and here we go, on a month-over-month basis for PCE, up 0.1 as expected. On a year-over-year PCE, up 2.1. That's 0.1 lighter than we were expecting. 2.1 equals SEPA 24. To find a lower one, you're back to February of 21. Now let's look at the core numbers. On a month-over-month basis, up 0.1, exactly as expected. And if we look at a year-over-year perspective, 2.5 exactly as expected. A tenth lower than 2.6 last month, which then was revised to 2.7, which makes us down 0.2%. 2.5.
So he just said, I don't know if you missed it. I'm going to go show you this over here on the economic calendar. This was just revised. And this is another piece of the puzzle where it's like, okay, I still scratch my head. So this is how powerful the tariffs are, folks. This is how powerful it is, because this number would have rocked the market otherwise. Let's look at the core PCE. It was 2.6 right through here. They revised it to 2.7. And then it came down to 2.5. That's a pretty darn big move. He's going to get to some of these other numbers in a second. But look right through here. PCE price index month over month, 0. Previously, now it went up 0.1. These are fantastic inflation numbers, folks. So now everybody's, or in the markets, are focusing on only the tariff stuff. So let Rick take it away, and he's going to come on and conclude with some really important information. So pay attention to it. And then when we come back, I'll show you market reaction to this and my expectations, short-term, mid-term, and long-term. So let's take it away.
Well, the last time we were here, if I have to go back, wow, it's been a while since 2.5. I would say that you're going back to the spring of 21. Now, we talked about inventories. The last number is, of course, a very important number to this administration. This is the trade balance, which is a deficit, expecting minus 143 billion. Wow, it comes in much, much smaller, minus 87 billion. And now this follows a 163 that gets converted to 162 billion with a minus sign, the worst since record-keeping 1989. Then we cut it in half to 87.6. 87.6.
Did you get that? Did you get it? The trade deficit was the highest ever, basically in history. Here's where it is, right through here. The goods trade balance, 162 billion negative. It was cut to 87. So is this helping with the tariffs? Are we shipping less? Are we receiving less? What's actually happening behind this? That's an anomaly that we really want to focus in on. Let's see if Rick covers that in the rest of this. I don't think he does.
6 would be the lightest, and I have to really go back. 87.6 would be the lightest since, wow, September of 23, SEP of 23. And this really does underscore how the movement of goods and services has really changed due to a variety of tariff-related issues. Now, after all of that, where are the markets? Well, up a little bit. We were at 441. We're now at 443 and a 10. By the way, it settled last week at 451. A 2-year is at 393. It was at 392 before the number, down 7 on the week. And I will just point out one more thing. Both maturities before the number were on pace for the lowest yield closes in 3 weeks, but we see that rates have moved up just a smidge. Joe, back to you.
So that's the head scratcher. We come in and we get the inflation numbers that kind of rock the markets. And then you have the trade gap that went in half. If it wasn't for the tariffs and all the smoke screens from, and I'm not going to say it's a smoke screen. You go over to here, here's Yahoo Finance. Here's what they're looking at. So let's break this down, because I love taking this data and helping you guys decipher it. Just to, I know it's mainstream media and we're looking at it, but let's look at what's going on in the mainstream right now. We have Trump claims China totally violated the trade agreement. That's going to be that's going to be an event going forward. Fed preferred inflation rate cools. U.S. goods trade deficit narrows. NVIDIA China's setback. Costco defies tariff shifts. Tariff ruling threatens $2 trillion loophole. The end of easy U.S. stock bets and so forth. So here's the U.S. consumer spending slows. U.S. inflation tepid. The news is so far is really good, other than this stuff right through here. You got this and all the other big, beautiful tax bills. Once all those settle, where's the market's going to be? So if you're looking through all this data and you just extract out the smoke from this, the economy's looking pretty darn good. We got incomes up. We got inflation down. Now, if we get the uncertainty of all this behind us, you're going to see a nice little market rally that we're going to see. When that's going to be, don't know. So let's go over short-term, mid-term, and long-term views that I'm seeing right through here. We had a lot of data coming in this week that filled in a lot of this gap through here with the Federal Reserve monitors. Now, when is the Federal Reserve going to meet? Let's pull that up just so we can check out there. The Federal Reserve is going to meet in about 2.5 weeks. You can go to the CME Fed Watch tool. It's actually the Chicago Mercantile Exchange put this together, and they're telling us, or at least giving us their predictions of what the Federal Reserve will do at the next meetings, kind of going forward. In 19 days, the Fed's meeting. Let's go over and see what the probabilities are that they're going to cut rates. We'll go through here, get my head out of the way so you guys can see the chart. There is a 97% chance they're not going to cut rates, and this is right through here. On June 18th is the next meeting. Federal funds rate is 4.25 to 4.5. You're going to see right there at the top of the screen. There's a 97% chance it'll be that. Well, how I can prove that that's where we are now is we go over to right through here. Federal funds rate is 4.25 to 4.5. So we go back there, and that's where we are. So July, 75% chance it's going to stick there. And then July, August, September is now when there might be a pivot point, but only time's going to tell. But this proves to us when the tariff situation settled, a lot of things are in pretty darn good place where we are right now. So am I saying this is a great time to buy? No. Am I saying it's a great time to sell? Nope. I'm leaving that up to you guys. I'm here to help you guys with the financing piece of this puzzle. So let's get back to mortgage rates and where I'm expecting them to go right now. So I'm expecting the midterm right now, if you can get 7% lock in, if you can get a little bit lower than that, you should be in good shape. Midterms, if you can hold off maybe 45 days, you might see a good reprieve in these things right through here. I'm expecting rates to drop a little bit further, continued through the rest of the year. Hopefully we don't have any more jolts from these tariff debacles, because if we take that fear and that risk spread out of bonds, you're going to see bonds coming in really nicely down the road, but only time's going to tell on those things. But so far, with the economic news we have so far today, inflation's down, incomes are up, the trade deficit is down, nothing but good news. But unfortunately, mortgage rates aren't moving at all, because it's more of a Trump trade in regards to the tax bill and the tariffs going on, that who knows when that's ever going to end. So that's what our report is for today. Equity markets, that's Bitcoin. I was going to say the equity markets just took it on a chin, but that's Bitcoin. Let's get back over to the equity markets and see where they are faring for today. It's a completely flat market. NASDAQ's down a little bit. So equities, flat as a pancake. We got bonds, flat as a pancake. It's an anomaly because there was fantastic news out today, and I can't figure out why this isn't going. But the only reason why you can think of is the uncertainties of the market. They just don't know where this big, beautiful tax bill is going to go, as well as tariffs. So now if you're out there, you're looking to buy or refinance a house, how do you do it? Who do you use? Well, I hope you can use me. Here's why. My name is Dan Frio. I do this report twice a day to inform you guys what in the heck's going on with these things over here. The reason being is I'm actually a federally licensed mortgage loan officer. Yeah, I work at a federal bank, and that makes me federally licensed so I can lend in all 50 states as well as Puerto Rico. The cool thing about us here is at the Frio team is we have 33 lenders that we work with. So we're a federal bank, and we're also a large brokerage. So just think about it. If you have the option to put in your application in here, so there's one application, one credit pool, we're going to shop your loan to over 30 different lenders, and that's how we do it. I work at a federal bank, and we're also a large brokerage with 33 lenders in the background. So that's what we do. If you want to learn more about me and my team, just go to therateupdate.com. They are making some changes here. There was a glitch in the system last night right through here, but we do have a lot of our data right through here. I did add my podcasting to the page. It's right through here. I think that's maybe what messed this up. So I have a podcast I produce every day that I post on here as well, and you can also find that right up through here. You can click the podcast. Probably didn't know that I had all these podcasts. There's, I think, 1,100 there. So if you want to learn more about real estate, you can also check out my podcast as well. So thanks for watching today, folks. God bless. Have a fantastic afternoon. I'll be back here at the closing bell to let you know how this mess ends for the day. Thanks for watching. Bye-bye.